Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is a very, very special guest, our good friend, Dr. Marc Faber, the editor and publisher of Gloom, Boom, and Doom Report. Welcome back, sir.
Well, thank you very much for having me on your program. And Happy New Year to you, to your listeners and viewers.
Yeah, Happy New Year. We really appreciate you having come back down to Wall Street Silver. So, Dr. Faber, we're seeing the global dominance of the US dollar erode with countries like the BRICS nations being formed. In your eyes, are we entering a completely different world moving forward?
Yes, I believe that this different world began already 20 years ago or so with essentially the complete breakdown of the socialist communist ideas in emerging economies, notably in China and also in India, where they had very socialist policies before, but now the country is a very capitalistic society or has become a capitalistic society.
Mm-hmm.
And then I think that over the last 20 years, the prestige of the United States has gone down a lot. And it has to do with the leadership of the US, especially under the recent administration of Mr. Biden. I mean, when the foreigners look at some of the characters that are populating senior positions in the administration, then I mean they laugh. They have to think, what is this? A country that lectures us about how we should live and about how corrupt we are, but themselves they are also corrupt and this and that and so forth. So I think the prestige of the US has gone down a lot. What helped the US dollar over the last 18 months has been completely kind of asymmetrical monetary policies by the ECB, notably, and by the Bank of Japan, in the sense that in view of rising prices, which began not just this in 2022, but already in 21, we saw consumer prices going up, and before we saw asset prices going up. So we had inflation, monetary inflation in the system for a long time. But in spite of that, they kept interest rates next to zero or below 0 while at least in the US, in 2022, they began to increase rates, not very much. And as you know, the Fed fund rate today at around 4% is still below the rate of inflation. So when someone says we have tight monetary conditions, yes, relative to a year ago, they are tight, but they're not tight if we consider the rate of consumer price increases that we have at the present time. To answer your question, the world is no longer very kind of America-centric. What is America-centric is NATO, the United Kingdom, Canada, and Australia.
Australia, yeah.
When you look at what's going on, the steps that the Federal Reserve is taking right now to raise rates dramatically, gradually let their balance sheet run off, and you're starting to see the economy slow down dramatically in the United States. Layoffs seem to be being announced in every major company out there, and probably a lot more layoffs that aren't being announced. Do you think the Fed's going to be able to continue this path that they're on for long, or will a recession and rising unemployment force them to change course at some point during 2023?
Well, we need to call Sigmund Freud, a psychoanalyst, to find the frame of mind of Mr. Powell. But seriously, I think you raise a very important issue. The Fed and ECB have been tightening at a rapid rate. Essentially, the rate of increase in interest rates is the highest since the late 70s under Paul Volcker. But as I said, the problem was that for years and years, I mean, not just the last few years, but essentially starting with the recession in 2000 and 2001, when the recession occurred because of the bursting of the dot-com bubble. After that, they kept interest rates essentially all the time too low. We have to see this very clearly. And especially after the quantitative easing moves of Mr. Bernanke in December 2008, after that, we had essentially interest rates that were extremely low. And we had asset inflation. Now, it's very difficult to explain to someone who is not, who hasn't studied economics, what is inflation? People say, oh, the price of carrots, of potatoes, of pizzas goes up, there's inflation. When stocks go up, it's a bull market. You understand? When home prices go up, it's very good. But when food prices go up, it's very bad, and so forth. But home price increases are good for people who own a home. For anybody who does not own his house, real estate inflation is bad, because young people don't own their homes unless they are children of politicians who will inherit a lot of money. You understand? If you're a child of a politician, you will inherit millions or billions. And I'm not exaggerating in the billions. Some presidents have made billions, I can assure you. The warmongers, you know how much money flows through wars? It's very difficult for someone to clearly understand. Inflation is basically an increase in the quantity of paper money. Now, the symptom of inflation can occur at times in the increase of commodity prices, at times in the increase of real estate prices, at times in the increase of consumer good prices. And the housewives, they understand that when goods they buy in the supermarket become more expensive, then they say it's inflation. But inflation can also be an increase in the price of your house or of stocks and so forth. And so we need to define it very clearly. For the central bank, it's always been good that assets go up in price. Right. Because the paymasters of central banks are rich people. It's not the poor people that support central banks, but rich people. Wall Street supports central banks printing of money because Wall Street is the prime beneficiary of increased paper money creation through the increase in the asset values of funds and of the stock market. And therefore the fees go up for the hedge funds and for the asset managers, because you are paid as an asset manager as a percent of assets under management. So if they go down, you earn less. If they go up, you earn more. Well, it's very clear.
Yeah, no, the incentives are clear. At some point, though, you're seeing. I think Goldman Sachs just announced major layoffs of almost 10% of their workforce, and I'm sure the other investment banks are doing the same right now. At some point, though, you got to assume, they're the real ones who call the shots. There's a revolving door between J.P. Morgan and Goldman Sachs and the Fed and the U.S. Treasury. Their people seem to just go back and forth for a few years. At some point, though, you got to assume they're going to want to. The orders are going to go out from whoever's calling the shots and say, "Hey, it's time to turn on the juice again. It's time to get the money spigot flowing." They're not going to let the Fed, drive us into a real deep recession, because then nobody makes money, right? There's only pain in that situation.
Well, this is a very good question, which I'm dealing with extensively, because I think the Fed has two options now. And I'm giving you the two options. The one is they keep on tightening, in my opinion. And I have to say, I never would have thought that in my life I would ever say that the Fed is tightening too much.
Wow.
But in the present situation, in some ways, I find it that they're over tightening, because I believe the decline in asset markets that we are experiencing is causing huge losses among some market participants. You know, we're not talking about small losses, but huge losses. And I think that within 6 months, consumption will badly disappoint. But you have to also see, as long as we have so-called consumer good inflation and service inflation of around 6, 8% or 9%, you can avoid showing a recession in nominal terms. You understand? You can show GDP growth of, say, 2%, when if you adjust it properly for the inflation, it would be actually negative growth. One thing we know for sure, that is clearly demonstrated: wages in the world are going down at the present time in real terms, inflation adjusted.
Yeah.
Statistically, 100% established. Now, one way to measure GDP is to add all wages in the world together. So at the present time, in real times, GDP is going down in real terms. The Fed, by over tightening, they can cause damage. Now, the alternative is what you just mentioned before, that sometimes this year, and I believe that what you said is correct, the Fed will panic and then they will print again. I also believe this. That's why I'm not ultra bearish on the market. If I were really in the camp of tightening, I would think that asset prices will drop another 30, 40% from here.
Right.
But the Fed may panic and then they may print again and move from quantitative tightening to quantitative easing. Now, what will happen to the economy in that condition? What could happen is that the economy stabilizes, doesn't recover a lot, because prices go up a lot. You know, they may rekindle inflationary pressures. And so in real terms, say the economy may contract by 2%, nominal terms, but if inflation is at 7, 8% or 9%, or goes to 15%, in real terms, the economy will tumble. And I can tell you, in high inflation countries, the standards of living of the lower classes have collapsed in every instance.
Yeah.
Wow.
In every instance. And then you get social problems usually.
Is there a step in between, though, between quantitative tightening and easing again, where perhaps the Fed just sort of pauses and just observes for a few meetings and just sort of digests the current rate increases to see how the economy responds? I don't think they necessarily just stop and immediately go reverse, right? Don't you think they would just pause for a while?
Yes, possibly. I mean, Mr. Powell doesn't strike me as a particularly courageous person.
Yeah. He's no Paul Volcker, right?
But who knows? We don't know. But my sense is that the Fed is not independent anymore.
Mm-hmm.
And the Biden administration, they feel that maybe the best is to bring the economy down for a while. And then in the second half of this year, 2023, and especially going into the election of 2024, they don't want to be in a massive recession.
Yeah. The election will, all the political pressure will force the Fed to turn on the juice for 2024, you think?
Yes, that's my sense.
Yeah, that makes sense. And they have to do it early too, because it takes 6 to 12 months for it to trickle through the economy, right? They can't wait until the summer of 2024. They've got to start that probably in the middle or early 2023 to really have that trickle through the system.
Yes, I agree with that view.
Yeah.
But there is one point I want to make. Today, I got the chart that shows that the price to sales ratio of the S&P is still 20% higher than at the last high, which was in 2000, just before the dot-com bubble burst. So although stocks are down, don't think for a minute that they are cheap, historically seen. Look at the chart of Micron Technology, at the chart of Tesla, of NVIDIA, of Taiwan Semiconductor. All these charts, all the stocks are still in the sky. In my opinion, the upside is very limited and the downside is still high. Now, as I said, through money printing, renewed money printing, you may prevent stocks from collapsing. Between 1966 and 1982, the Dow moved sideways, okay? In 82, it was no higher than in 66, it was lower. It was below 800 at the low in August 82. I remember very well because suddenly the market went up like a rocket and I was short. Although it had moved sideways during that period, in real terms, inflation adjusted, it was down 70%. 70.
Gotcha.
Because inflation was very high during those years. It hurt also bonds, but bonds, as a bondholder, I am happy that interest rates have gone up for me because I keep through my business. I mean, I have a business. I always have a large amount of liquidity. And in the last 2 years with zero interest rate, I had no interest income. But now at 4%, let's say on $1 million, you get 40,000, on 10 million, 400,000. It's not as high as inflation, but it's better than zero.
Dr. Faber, we've seen now silver and gold have an interesting breakout these past couple of months. In your opinion, are you buying more gold or silver? What are you doing right now?
I always buy the same quantity for the last 20 years. And before that, I bought the same quantity, but less because I wasn't so rich for the last 40 years. I mean, since the break of gold in 1980,
right?
In like 84, 85, I started to buy every month.
And so no matter what, every month he buys it. You don't even
every
have to
month.
tell him.
I don't even look at it.
Are there any other commodities you're looking at besides gold and silver right now for 2023, or any of the mining stocks for some of those commodities? What do you think is your focus?
Yes. I occasionally add to my position to where I have the standing order. So in 2015, when gold dropped to around 1,000, I bought quite a lot more. And recently I bought platinum in 2022. I increased my position in platinum.
Yeah, there's the platinum chart.
And I buy, you can see there's a clear breakout in recent times.
Mm-hmm.
Now we need to wait whether it is a genuine breakout or a fake breakout.
What would make it genuine?
The funny markets now, but I believe sincerely, a lot of people are still overweight assets. I think as markets recover somewhat or whatever happens, they will be more cautious and they will reduce positions. Then they have cash. If you have cash and someone puts a gun on your head and says, look, you must invest this cash in a currency.
Right.
I wouldn't trust the US dollars for the next 10 years or 5 years. I just need to look at Mr. Biden and at Mr. Blinken and at other clowns in the administration.
Yeah.
I wouldn't trust the currency that is run by people like that. And then I look at the euro, at this genius, Ursula von der Leyen.
And Madame Lagarde.
It's hard to believe that democracies have managed to put the worst people in leading positions.
It is amazing.
I ask my German friends, how can you have this kind of government?
They're all incompetent. It's crazy.
Well, I mean, I think that Ursula, the current European Union president, she was installed basically by Angela Merkel, wasn't she? Over everyone else.
She's the daughter of an important politician that supported Merkel. And she was the defense minister in Germany. But she was so useless, they kicked her out.
Yeah, she has a, I saw her background. She just has a monumental history of mediocre or horrible performance in every position she's been at. And she's just been promoted through failure to get rid of her. I mean, and now she's, it's and same thing with
most politicians are the same. Most politicians are the same. Give me one achievement of Mr. Trudeau.
There's none.
Ivan's a Canadian. He that one hits a little close to home for him.
Yeah, it hurts.
He wouldn't even qualify as a teacher of a kindergarten.
So, Dr. Faber, the war in Ukraine, a lot of people are bringing this up again. It isn't making any sense to anyone, and the energy prices are completely out of control. Is there any reason why not one person is negotiating a peace today?
War is a huge business. Some people who sit in comfortable homes, in armchairs, well-heated homes, because the heating bills are paid by the government, they love it.
Yeah.
They love it. And, in a democracy, the best way to keep people on your side is to create a common enemy. COVID was a common enemy.
Right.
You know the result.
I think a lot of people are probably making a lot of money on the war, and so as long as that's still going, as long as that's still happening, there's no incentive for anyone to quit.
No incentive at all, especially not because no American gets hurt. You understand? It's the Ukraine that suffer and Russia. But I think eventually common sense will prevail and will not go into World War III. But it could be. But I'm saying because of these uncertainties, it is better to be diversified And I still believe that in precious metals, you are better off in the long run than in paper currencies that are run by Mr. Powell and Miss Lagarde and Mr. Kuroda in Japan, and all these characters that are basically clueless. You understand? They're not Newtons or Einsteins of this world. They're clueless individuals who essentially let someone like this Sam Bankstein.
Bankman-Fried,
What's
Sam
his name?
SBF.
I mean, the Fed is responsible for the supervision of the capital market.
Yeah.
They let it go. They're also the SEC. The SEC is basically there to protect small investors. But what happened, the SEC protects big money, not small money.
Yeah,
right.
Believe me. But I want to make a last comment.
Oh, of course. The floor is yours.
You know, if you look at the performance of the US, that's another chart I got today. The US has performed very well since 2008. I mean, from the lows in 2009. International markets, they're still below the peak in 2007. Emerging markets have had a disastrous performance relative to the US over the last few years, especially China and Hong Kong. And there are many other markets that have performed poorly. But as a result of that, there is now some value in emerging economies, including China. And this is where I would focus. I mean, you started the discussion about the BRICS and, you know, the new system. I agree. If I had to put all my money on one horse, it would be the horse of non-NATO countries. We had a very good example. Recently, there was the FIFA World Cup. First of all, the European administration, these geniuses that run the EU, they all kept on accusing FIFA and Qatar of corruption.
Right, yeah.
Who committed the corruption? The European officials. The vice president of the EU is involved in it. It's the best joke.
Yeah.
But they condemned the others. And then they accuse Qatar of incompetence and this and that and human abuse. Everything was against them. Finally, it came to the final. Argentina against France, okay? France is a NATO country. France played very well, and it was a very thrilling final, one of the best in World Cup history. Similar to the finals, Brazil-Sweden in 1958, if I recall well, because I was at the time just growing up, so I was so familiar with it. We didn't have a TV in every room. Anyway, Argentina won. Who do you think the whole world supported in that match? By whole world, I mean 90% of the world's population loved Argentina to win because, the Europeans, the Germans, the UK, they hate France if they were in the finals. And the others of the rest of the world, they don't like NATO countries because they lecture them all the time. And Macron, the president of France, is also kind of a WEF, you know, World Economic Forum guy who is well educated but cannot communicate with individuals, with the normal man. Up here is something wrong with him anyway.
Did you see after the match, after France lost, Macron was on the field and he was trying to console the players, and the player was like just totally wanted nothing to do with Macron. He was totally just ignoring him.
No, he's completely out of place. But this is the kind of politicians we have. They want to court celebrities.
Yeah.
Right.
And Macron wanted to project that he's a man of the people.
Yeah.
But the players know he has nothing to do with the players. They have no sympathy for him.
A lot of the world wanted to see Argentina win for many of the reasons that you just said, but also, Messier really, they wanted to see him end his career on a high point. He has so many fans around the world.
Yes, but equally Mbappe, he shot 3 goals. He's a hat trick. This is very seldom. Very seldom.
Yeah,
it's unbelievable performance.
But he's a young guy. I think he's what, 23. He's got a few
23.
more. Wow. He's got a few more World Cups.
He's my age. He's my age.
He's your age.
I would not be surprised if he'll win another one before he's done. I'm sure.
He's one of us.
Yeah, he's one of us. All right, take care, everyone.
Cheers to him.